Hello guys, welcome to Traders Therapy Session. I'm your host KRO. And today's video guys, we're gonna dive in, into market maker model, the same video that we talked about from the previous two videos. Without wasting any time guys, just a little disclaimer there. I'm not a financial advisor. I don't advise anyone to utilize their funds to trade the financial markets. No, we are not doing that, guys. I'm just doing this for educational purposes. And if someone wishes to participate and practice, if they can see, if they just to see if they can perform into this financial market, I'm not advising anyone to do so. Paper trading or demo trading, that would be my advice to you, since you are not going to make or lose any money. So without wasting any time, guys, let's just get into the video. I like everyone here, guys, to focus, because this will seem like something so complex if you are not following. You better go to the previous two videos where I've even explained this as a schematic, because I've mentioned before that I will deal with this buy model because it's what the current price is giving us, and I will explain that. As we move with the price, one will see, maybe in future we'll see the market maker sell model from the higher time frame, and we can peel it down to the lower time frame, just like the way we do with the buy model. So guys, without wasting any time, just a warning to those of you who did not watch the previous videos, guys. You will see this as a difficult thing to absorb, but if you watch the previous videos and you still have some clarity seeking questions, maybe this might help you as we go and recap what we studied there until the point where the market is. We had a sell side of the curve and the buy side of the curve, and market maker model works in two ways. And I advised you last week that if you are new doing this, you better focus on the second phase, not the first phase. Why? Let the first phase give you all the confirmation, give you the way, lead you. Let the first confirmation lead you, the first phase lead you, then utilize the second phase, utilize the first phase as a reference to your second phase trading. What I mean by that is that if you see market maker model forming like this, if you knew or you haven't grasped the idea, don't trade this one. Wait for it to perform and wait for this to happen. Wait for this side, and then on a lower time frame we'll establish and show how we can get low the entries here. But remember, on a previous video, we explained this. So now we're not going to explain this. Rather, we'll explain similar thing here where the market is on Friday. What happened on Friday? Well, on Friday we still had a market maker model. The one that you see here, we still had on Friday. So we'll explain rather than instead of explaining this one, something that we have explained before. Let us talk about something that is new and current. And by the way, I took a loss, guys, on a good day of trading. So without wasting any time, let's get those ones. Let's recap and get those ones who might have or might have stuck somewhere along this, so that they can be in line with us. So we start annotating market from this consolidation right here. We didn't have a test, then we returned to the consolidation that was supposed to be your first entry. As market was moving low, we are only utilizing the daily. Then we had a market structure shift, and then right here with the displacement, return to the fair value gap, market structure. The price went lower. Why? Because we had a point of interest right here. This is what we were looking for. This was our draw on liquidity. Sell side of the curve, we're done with it. So how do we utilize sell side of the curve to buy? As market is moving towards our draw on liquidity, the highs that are created, we call that the buy side, engineered buy side liquidity, So we'll utilize that as a reference. As I explained before, that I like to take this, use it as an inverse, rather than leaving it as it is. These highs, there are more, how do I put this? There's more confirmations, I would say that, or strong reference. There are strong references with price, especially with the order flow, or you can treat it as your support and resistance like that. This is how I like to use it, by the way, and you will see how nice this works. So I've put this fib right here just for standard deviations, because after getting here, now remember guys, you need to understand this model. Like, you need to practice it. Go back, practice if you did not do that, so that as I explain this, the more light will come to you. Remember, how do you view this thing? Original consolidation, we know we want to go to the higher time frame, POI. Then after that, what do? The price should go back above this original consolidation. That would be your TP. This is where we are. Why are we still buying? Why are we still selling? Why should we sell? We have standard deviation right here. There's a standard deviation right there. From this high, this two leg, from this low to this high, then there are your points. We have negative 150, negative 200, or you can say negative 1.5 and negative 2. Negative 1 standard deviation. Above that, we had a point of interest, which is here. Then we had this other point of interest, but we have this as well. So this is the reason why. And we know that after breaking this, the market should not come back for the previous one. So we're holding those buys. Guys, now that we got everyone into speed with where we are with price, now we are going to the current price. Because you might annotate this. Some of you guys, you will wait for months to see this happening again. So how do you take this into your day trading? This happens also, guys, on a lower time frame. So, but now because you know where you are going with a higher time frame, and this is more like 50-50 because we are above the original consolidation. We're not sure about this. We just missed this a little bit and this high. The only reasons why we should buy is to reach this and this. This becomes our draw on liquidity. There's two areas. So the reason why we should sell again is because we had a market structure shift right here. We might revisit, but I don't want to focus on that right now. So we're going to go to the current price and see how we utilize that, take advantage of it. Because at some point, let me just explain this, and I hope I'm not losing anyone. We said after price broke this high, it should never come back here. So if price is here, you look at this here, you know that price should not come back below anywhere here, right? So if you are here, that's where you should channel your psychology towards this, where the price is. And if we are here, we are not going to come here, but where is our draw on liquidity? I know that we have the high, we have the above, and that. So you follow that. That's where and that's how you pack. You unpack your trip. We go back to Bus Driver 2023 model now. You unpack, you have this, of which it is long-term goal, plus you have this right here, and then the high that is responsible, the fair value gap that is responsible for other fair value gaps. Let me just do this. Let me just say 1 month. Let's just go to 1 month. I want to outline this as fast, please. Look at what we have on 1 month. We have this fair value gap right here where price went to it. We know that this high is responsible for this fair value gap. So to consider this fair value gap valid, we should break above this high right here. So let's go to 1 week. Take the price to 1 week. To the weekly time frame, we went low. And I guess we went below 50%. There we go. We have an OTE entry. We have a fair value gap right here. So to consider this fair value gap valid, we must also take this high. However, we have this right here. What are we doing with this? We know that ultimate target is this one, but we are dealing with this right here. Let us map our way. Okay, we had the low, 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 low. We had this being taken out. 1, 2. Now we're focusing on the 3. So going from the weekly, our main focus is to take this highs right there. Now let's go to the daily. That's where everything comes in now. Sorry guys for the connectivity. Now we're coming for the daily. Remember, this is our draw on liquidity. Let me just... This comes from the... Guys, I will keep on moving this, so you must be in line with this by now. So this is our draw on liquidity from the monthly and the weekly. So now we are on a daily. We know this being our draw on liquidity, and we had that. So how do we approach that? This high of which we pierced above, and then we have that area. On the daily so far, I can say I did not have, but before we, this point was our target for the week. If you can remember, the price when this was recorded, when the previous videos were recorded, the price was somewhere around here. So we knew that it should not come back below this. So now once we break above this, this becomes the point of interest, but I'm not convinced with the break. So this is the reason why I said I'm 50-50, but let's go to the lower time frame and see what we have here. Remember your psychology. Where are you with the market? You are here. The point of interest is here. Now you are trying to see, and you do not want that. You are trying to see how we respect this area right here. And if we come low, you change. If you come lower than this area, it means that something might happen. You wait and see what the price gives you. That's what you do. So now we'll go to, let's go to H4 and see what we have there. We took out this. Price should not come here. What price did so far, it's good. It has respected the area right there. Remember, I'm annotating this using the reference of engineered buy-side liquidity. I'm not taking everything with me now. Plus, we had a fair value gap. The price went into it. So this is where we are. This is the target, the ultimate target. I'll be happy if price breaks above this area right here and goes up. So now let's go to 1 hour time frame and see what is happening. We're expanding this price even further. Remember, we are at that top, that pennant like daily. We are here, guys. Let's go back to daily just for a second. We're here, guys. Forget everything below. We are here, guys. We are dealing with this price right here. So we'll go to the hourly. This is where we are. This is that kind of opinion that you see right there. So, okay, let's wait. And let's see what here. Please follow, guys. Here is when, and this is where I want everyone to start pay attention, because this is your development. This is where it starts. When you say I've learned that structure, but I want to do it myself, I want to see more of it, and I want to see how it acts and reacts. This is where it comes. Without going far, guys, let me make myself ICT for a while, not just trying to replace him or do anything. Let me just do what he likes to do. Pause the video at this moment and annotate what you see on the market right now. Okay, guys, if you did not do that, that will be you denied yourself an experience. Remember, we're dealing with market maker model only, guys. Oh, something. We're dealing with only market maker model. Sorry for that, guys. We have this consolidation right here. This highs, see the candle close. We have the run above the original consolidation. Guys, this is how the market moves. This is how everything else, the mitigation, the power of threes, your breakers, silver bullets, even the silver bullet, and I will prove it to you right now, even the silver bullets work inside this. So this houses everything, I can say. And it's so amazing after you find out the went and come back. Now it came back with what? On a fair value gap right here, the one that you have right here. Look at the time right there. During New York kill zone, then the market went up. That was Monday though. Let me remove this, sorry. Then the Monday trade. Then going to Tuesday. What did we see on Tuesday? Okay, we had a London here. Dropping. And we have a New York finishing off. Then plus we have a PM session. Doing the thing. Revisiting that fair value gap right there. Then we had Wednesday. New York. Fair value gap at the right place at the right time. Guys, please, I'm not annotating the what is it that you see here, everything else that you see here. Now I'm starting to see market maker sell model on an hourly time frame. Why am I seeing that, guys? We had a TP, we have a TP here, of which is higher time frame, of which is a higher time frame point of interest. The high, maybe we get the fair value gap right there, or we get that negative 1.5. But where are we with the market? If I am correct, after seeing consolidation, break above, if there was no point of interest, the higher time frame point of interest here, let's see, because we're not going to go far with the market there. No. We're just trying to explain whatever is happening, and then I'm still going to show you another one here on the lower time frame and see how you can utilize this and check the market, check how the market moves. So after it came, it went above. For me, I'm starting to see it here as it returns. This is the second return, guys. So this lows, let me put it like this for those of you who might be struggling with annotating this. I just flipped the chart. I want to make it look like the one from the hour, the one from the daily. I mean to say, we had a consolidation right here, return to consolidation. It went here, and you can remember from the previous video, there's something that I said about price coming here, and then it left maybe the relative equal lows to go low, relative equal low to go to the lower area, right there. So it returned. Price keeps on creating what here? Keeps on generating what? Engineering buy side liquidity here. So it will be sell side liquidity because it's flipped. This one is flipped. So as the price will go to the lowest area, of which is this one right here, if it comes here, I will start to look at what? I will start to look at my 3 points. I will start to look at the first thing first. I will want to see smart money reversal. On the smart money reversal, I will want to see smart SMT, smart money divergence. On that one, again, I will want to utilize any 2022 model, being power of 3, being breaker mitigation, anything that I can get right there, even advanced breaker, then that could be an entry. Targeting what? Targeting knowing that the price is targeting the area above this original consolidation. And some might say, no, this did not return. This for me, it's a consolidation. I don't care, guys. The way I've seen this thing, say this is my original consolidation. I don't care. The way I've seen this thing, it accommodates even that. Whether you take the small one or the big one, the price reacts most likely at a certain area. But I'll still do more research on that one, because first, second, then to go and create the lows to go maybe lower than this. So up to so far, we are still respecting this fair value gap, even though we give the mohawk to that one. And then we're not done, because this fair value gap, the one that you see here, this low is responsible for this fair value gap. Let me turn. Now fix your eyes back. I'm turning the market the way it's supposed to be. I'm saying, if you see this fair value gap right here, this high is responsible for this fair value gap. If this is valid, and even if this is valid, this high is still responsible for this fair value gap. So the market has to break this high to validate this fair value gap right here. These two fair value gaps right here. So I'm holding that. If that is not happening, guys, I'm not going to not necessarily do anything, but I will start to change. I will now start to look at the closest hanging fruit trades, but now I wish to get one of these good trades and put a stamp on the market maker model. So guys, let me show you how I should have played the Friday trade, and then how the market maker model presented itself as well. Now that we talked about this one going, let me even remove this. A lot of cluttering the chart. Let's take this one back as well. So you saw this, what happened. You can still see it here. You can still see it here. You can still see it here, guys. It's up to you. So from here, I'll go to the lower time frame. Let me just jump into 15 minutes. This is how I lost this trade, guys. It's bad. And by the way, in most cases, you are not going to lose the trade because you are a bad analyst, but you lose a trade because you get carried away at that time. So before trading, make sure that you are calm, you are well collected, and you are ready to trade. Like nothing is disturbing you. Because if you do that, guys, you're going to see things that are not supposed to be seen. Let me go to 5 minutes. Okay. From here, this is the silver bullet. Like I said, if you're only looking at a silver bullet, but if I understand the market maker model, I will be able to trade silver bullet more often successfully than just looking at the silver bullet, just looking at the fair value gap entering, that's it. But if I understand the market maker model, I will know where we are with the model. And then if I get this silver bullet, I know where it helps me. It will help me to get to my target, to reach to the target, to the main target. So this comes in handy again, guys. I would advise you to be able to understand whatever is happening that here. You can see a clear consolidation. I'm not going to go to the higher time frame and everything like that. Here on an hourly time frame, we had these two fair value gaps. One fair value gap of which was revisited for many times. Come back here. We had this hourly fair value gap, the big one. If guys, you do not understand, do not rush yourself. Please pause this, go back, understand what I'm talking about when I annotate this. Let it come back again. It is my wish for all of you to understand this thing. We had the first test, the second test, but is this test within the period where this fair value gap has to go above here. So we cannot say this is a second hand. It's a second test, but not second hand. And if you do not understand what I mean by the second hand, is when the fair value gap is created, it performed, and it comes back again. Like let me look for second hand. Okay, let's take this one. I know that this is not the ideal explanation, but let's just take this one right here. This is a fair value gap. We have the high price came into this fair value gap. This high is responsible for this fair value gap. So to consider this fair value gap valid, it needs to break this high. Then it went up and broke that high. You see, then it came back. If it revisits this fair value gap, by the time the price comes here, I call this thing second hand because it has already worked. That's why I call it a second hand. So sometimes second hands they work, sometimes they don't work. Like this one, it's a good example. This did not work. Okay, guys. Let me take that one out. Come back to where the market is right now. So this was an AM session. As you can see, from 10 a.m. to 11 a.m., we expect a silver bullet. But I don't know, guys. Look at this. And be honest with yourself. And I also think this is the reason why this has left me. Because I didn't see it that way initially. And then I explained that seeing me having to see the market maker model, even if I'm selling, this is the sell side of a curve, guys. This is the sell side of the curve. What's the TP? Oh, the TP is above there. This is the sell side of the curve, guys. There we go. This is the sell side of the curve. Now we are getting into there. Forgive my curves, guys. We are getting into the buy side of the curve. Then we are getting, this is the sell side of the curve. Now we are getting into the buy side of the curve. That was Friday. This is the reason why I said I didn't see it that way. And hopefully it's gonna go above, because remember we are annotating the price to go even higher. But I'm not saying that the price might not even drop lower and then come back on a later stage. No, this is the reason why I even said the sell side of the curve should be what? Should be the one that you observe and then utilize the buy side. Then now let's come into the real thing now. Between 11, after this was left, between 10 to 11 a.m. New York local time, you wait for a fair value gap. There you have your fair value gap right there. A small little bit of a fair value gap. Look at the time, right time, 10:30, 10:20. I mean to say, it went, and it even give you the second chance to enter, of which you wouldn't and I wouldn't as well, if it left me up to this far. Why? Because this low is responsible for this fair value gap, and this low was taken out. So it went, but you could have trusted it because this was not yet taken out. Then until it came, and then it reached your TP. Let's remove this. I hope you guys are following, and if not, please guys, do not beat yourself up. Go back. Come back with it slowly. You can watch this for 2 days until you understand what I'm trying to say. Plus, the English is not my mother tongue. Guys, it's my third, I would say, or second language. Let me just put it that way. So, yeah, that can be also something that make us not understand each other at the go. But please be patient with me and then go back to the charts and see what I'm saying, whether it's true or not. So guys, now that we're here, I said, if you get to this point, what are you starting to look at now? A smart money reversal. Check. Market structure. For me, we have a smart money reversal. After smart money reversal, now we're coming to what? Now let's go to smart money, SMT, smart money divergence. I would want us to go to 1025. Is it 1025? Or is it 930 to 1050? Yeah. Let's take it from 930, where the market opened. Guys, this was clean trade. It doesn't mean that because I lost it, this doesn't work. The concepts doesn't work. The concepts do work. So I'm trying to accommodate also the retail traders, the price action traders. So which high will I pick here? From this one, let me pick this, or let me just try to pick that one right there. Do you see what is happening, guys? This is what is happening right here. Then I will want to go to the correlating assets to this one. This is Nasdaq. This is a mini Nasdaq. I will go to S&P and I will go to Dow and see if we have the certain things, because I said if we get to this area right here, we look at smart money reversal, checked, we have smart money divergence, that's where we're going for. And remember, your TP should be here. It doesn't mean it shouldn't be here because of now it's here. You are scared for it to be here. If it's a loss, it's a loss. You didn't annotate it well because it might even go lower. But this is where you are. This is what you get as a day trader. So what do you do? With this, let's go to another asset. I've already drew. This is S&P. Let's see, from 930. This is 930 to 1050. This is 1050. 930, 1050 is not even visible. Let's leave this one. This is the one that we are looking for. 930, 1050 exactly. Look at the part of the type of a pattern that you are having at this point. 1, 2. Now, let's come here. Look at the type of a pattern that you have right here. On the on Dow on US 30 market is moving. You have this type of a pattern but moving up. Here you have this part of a pattern and moving down. That alone should be a smart money divergence. Correct, checked. 2022 model now. Let me go to 3 minutes. See if I can see anything, guys. Now that things have been checked out with you here, or here as you analyzed your smart money, your SMT. Now, what do you have? After this, you broke the high. You don't have any inefficiency here that you can utilize and enter the entry. Go to 1 minute. The right timing. No, I'm utilizing the silver bullet. I don't trade this. I don't trade the market maker model. That's still fine. You are still accommodated on this one. Allow me to do this. I will edit or maybe not. Let's go long here. Within that period, you could enter using this entry, and this entry has a name. This is an advanced breaker because you're anticipating a breaker. This is a breaker entry. Then you have the what do we call this? The power of 3 entry. You like, let's just annotate what happened here. I'll take the long and the short. Let's go back, guys. Let's go back to full screen mode. I think I like that one better. We said this is the long. What will make you enter this? You have this fair value gap. You have the consequent encouragement. You have this order block. Let me stop with this one and show. And then you have this signature right here. The body close of this fair value of this order block, I mean to say, from up below the mean threshold. This could have been your entry. There's no any better entry than this one right here. Not saying that I took this entry, and I even confess that I'm still doing okay below the consequent encouragement. That's how I would play it, just to be on the safe side. and I know this highs needs to be taken out. So right above this, that would be my TP. 1:5. Sorry guys, my mouse pad, I'm not using the mouse, I'm using the one on the laptop. So I had my entry somewhere around there. Okay, above 1:5. This could have been your first entry to someone who saw advanced breaker. And let us just annotate the times. Guys, I think this is tired. Maybe my processor is tired here. When is this entry? 10:56. (10:56) in my local time. This will be 17:56. 4 minutes to 6 p.m. So the second one, you didn't want to take this, but you saw this one. You want to wait for market structure shift. That's okay. That's even fair. Market structure shift, but we did not take the high. To you, the light bulb should go on. Then we come back to this one right here. What type of a trade is this? What do we call this trade? Let's say if I trade this trade, what do we call this trade right there? This trade is called nothing but OTE, fair value gap. So I guess another long on an OTE. Guys, this replaces the algorithmic run, the one that I'm doing on this channel on a weekly review. How does it replaces it? Because in either way, this is the one that's supposed to be annotated. By the way, we're just improving there and there. 1:4. If you did not get it here, you caught it here. Still good trade. Somebody might say, guys, again, you want to go above, but you're seeing this consolidation right here. You can call this original consolidation, move away, return. You see, price moves. Or you can call this thing power of 3, accumulation, manipulation, and distribution. However you call that, that still goes. You had another entry right here. What time is it? Before lunch. And the original entry is this one, guys. Each and every entry, because original entry is within this hour. So each and every entry is a scale in. Even if you're late and taking another entry, consider it as like a scale in, because of your ultimate stop loss will be here. Consider this thing a management or a scale in trade, I mean to say. So I'm trusting that it's never going to go below this or below 50% of this, but let me just say below this is still fine. 1:3.8. This was a third entry. Plus, wait a minute. We had another one. We had another entry, this entry right here, but let's leave that one. So this is how you could have capitalized. This is 11:06. This entry was on 11:39. So, guys, if you were day trading, you could have capitalized on this one, but you know that if you are right with you, if you are correct, I mean to say with your model, this should be your TP, your ultimate TP. $13, $12, 13 is to 1 risk to reward. But look at this. Let's see if you could have still been in a trade. Yes, you still be on a trade by now, but it was moved that amount. 1:4. So anything else that I will think here, I will think of my, what is this? I'll think of my, let me not even erase this. I'm not going to utilize this for trading, guys. I'm going to utilize another layout, not this one. I'll just have to save this one until I see this happening. So now this came in here. As this are being broken, as this high is being we broke this highs. As we break this highs, I'm expecting the price not to respect the low. Now that we have broken this high with candles, I'm expecting the price not to come back into this low. And as we go to this one, I will wait for this before I can consider the following low, the low that follows right there. So if price comes back to this and hit this low right here, it means the market maker model was not valid by then. But even if it was not valid, this is where the concept of ICT comes in handy. The 5 handles lowest hanging fruit, you could have caught your lowest hanging fruit nicely utilizing this model right here, and all your models that you learned from ICT, they still work. It just helps for you to know how the market moves. Without wasting any time, guys, let me catch you on the next video. If you liked this and you see this as valuable, please share and bring more people and subscribe so that you can be part of the community on this one right here, since we are annotating the live market and then seeing what will the market give us, what we'll do. Without wasting any time, guys, let me catch you on the next video.